Hello, this is Chuck Trice, and this is Investment Tuesday. And today we're going to talk about equity marketing. Now, equity marketing comes in many different forms. And in fact, most things that we own have equity. I mean, we recognize that equity is in our cars and houses and things like that. So, thanks for joining the broadcast. And supposed to welcome you at the beginning of the show, and I forgot, and I just headed right on into the material, and some people like that. I've sent out a few invitations, and so we'll see who shows up and how that goes. And this is a show about common sense investing. And probably the term equity marketing, we haven't heard of that very much. And it's not used very much. I mean, we just don't talk about it, we don't hear about it, and we don't see it very much. But it is a big segment of the market. And, you know, everything that you've got has equity. I mean, you bought a car and you're going to sell it, and the equity is what you want. You take the debt, you pay that off. And so that's exactly what we're going to talk about today, is the equity that you might own in a piece of property and how that can be used in a real estate transaction. You know, most buyers and sellers are comfortable when you talk about cash and cash to loan. And we don't talk much about the other things that go along with it. You have cash, which is your down payment, and you might have saved that for many years. And then you go to the lender, and you get a loan, and that's called cash to loan. And so most residential properties are in a cash market. And nowadays it's pretty easy to get a loan if you've got pretty good credit and you've got collateral. The collateral could be the new house or the new building or the new piece of land. But since most people are in a cash market, we use a combination of savings and a new loan, and that's how we are able to buy a piece of property. And most people are comfortable with that, and most people understand that. Cash is easy to get, especially since about the 1980s. It's been easy to get. And the residential market and the cash and cash to loan market it's pretty big, and it's pretty hot today because you can get the money pretty easy. But there is a other side of the market that is also very large. And I think that this is a place where realtors should be using it, and they should be using this equity market. And this market will use all the assets at our disposal. Now, can you imagine doing a transaction with a combination of cash and loans and other assets such as houses and buildings and notes, promissory notes, insurance policies, and things like that? You know, we don't think in those terms because it's so easy to just go to the lender and get the money. But when you go to the lender and get the money, then you're going to be tied up with a 20 or 30-year loan, and that's going to be kind of daunting. I was going to try to add some photos from my Facebook album. You know, a lot of people, they don't have the cash right on hand. And let me go to that, put that up into the broadcast, drop that down. And there, we've got that guy right there, and all of us have been in that position. No cash, hard to get a loan, and I can use the land as a down payment. You might have good credit, you might have a very good income, but you have no cash and you want to get a loan. And so that's kind of a hard way to do business because you can't get people to go along with or understand the equity marketing part of the transaction. And I think equity marketing is a huge part of the transaction if we just allow it to be. Now, consider that in every market, it doesn't matter if you're in a little market or a big market, that people have assets. And these assets can all be used for equity, and you can be able to trade and buy and sell. And I'm going to talk about this just a little bit. And if you can see that on your screen, you might have to go full screen. But when you look down at the bottom, at the tip, you'll see that cash is a very small part of the market. And the reason that is because cash is harder to get than most other things, and it's not as readily available. But as you go up that diagram, you will see that there's a lot of people with land and houses and notes, and they're creative and they can do different things. And so that broadens your market. And so in a cash market, you're just relying on your cash and somebody else's cash, which is usually the bank. And so that's why it's such a narrow market. But when you get up to where you can add cash, you can add other things to a transaction, and then you greatly increase your market share. And you'd be surprised if you would sit down and talk to people and counsel them and ask a lot of questions. I was talking with my good friend Ed Berlinski today, and Ed and I were talking about this very thing, counseling our clients. And we were talking about a series of 10 questions that you need to be asking your clients. And let's see. And I think that's very true. I think we ought to ask the clients, and we do, a lot of people do, what do you intend to do? I mean, the client can be your seller or your buyer, but what do you intend to do when you sell? Or what are you going to do when you buy? Are you going to be here for a while? Is it going to be a second home? Is this going to be your primary residence? Is this going to be an investment? So those kind of questions we need to know. And it's not because we're prying or we're interested in what they're doing. I mean, we're interested to the point to where we want to be able to help them the most. Now, if you're a seller and I list your property and I just put it on the MLS system and I don't do anything else but put a sign out there, I've not counseled you. I've not talked about what you're going to do with the money. I've not asked if it was a rent house or a primary residence, if you got a tax impact or anything like that. I just put your house on the market and sell it. That's not very good service at all. And it may be a really good market. You may sell your house in 4 or 5 days or 2 or 3 weeks. And that's all well and good. But there's a lot of other things that we need to know as brokers. What are you going to do with the money? Are you going to buy another house? I mean, when you sell your house, you got so many days that you're going to have to be out of that property. So do we need to be looking for another place for you to go? Are you going to move across the country? Well, I can make that process a little easier. I can call one of my broker friends in another part of the country, and I can get them to give you some help. Oh, so this is a rental and you've owned it for 20 years. So what are you going to do when you sell this rental? Are you going to buy something else? Do you know that you're going to have a tax impact? Do you know that you got to have depreciation recapture? And yes, you will have depreciation recapture, and it does not matter whether you took the depreciation or not. You're going to have to recapture it. That's a rude awakening for some people, and it's not a very pleasant experience. What's also not a very pleasant experience is if you get to the closing table and you figure out that you had depreciation recapture that you're going to have to pay, and you have a capital gain on your property. And so that capital gain and that depreciation recapture can totally destroy your investment. You may not have made any money at all. In fact, you may owe money. So that's not a very pleasant thing to wind up. doing that. So Ed and I were talking about 10 things that we could ask. And I don't think the list is set in stone or anything like that, but we want to be able to ask those questions. And I think in equity marketing that we have to do that. Now, equity marketing is just another tool in the realtor's toolbox. Now, can you imagine this? If you've got a seller and that seller has got land, other houses, rent houses, a building or two, the seller has carried back promissory notes on land that he has sold, and those people are paying him monthly payments on that promissory note. Now, can you imagine what kind of a transaction that you could put together with that seller? Let's say that he doesn't need the tax deduction, it's a primary residence, and you're going to sell it. So the seller says, okay, I'm going to move to Florida and I want a nicer house than what I've got now. We're going to sell this house. We're going to go down there and buy. And so, in the marketing sessions that I go to, and I go to 5 or 6 of them a year, all the way from Colorado to Las Vegas, and we meet brokers from all over the country. And so now that I know that you're going to sell your house, you're going to move to Florida, and that you can add cash, you could add promissory notes, you could add land, you could add buildings, we're going to look for a really nice house because we know that you've got several avenues that you can make a deal with. Not only can you get a new loan, and you've got the collateral, but we might get somebody down there that would take that land, take those promissory notes as part payment for this house that you're going to buy. Now, can you imagine this, that you got to find a house in Florida, and that Florida gentleman or lady, they're going to sell this house and it's free and clear. And you say, I would give you $50,000 down, and I would like for you to finance this property for 20 years for me. And I will also give you a promissory note that's worth $100,000 that pays $800 a month. I think you could probably structure a deal that would do that. And I see that there's Mio Goria, and she's in the waiting room. And so I'm going to bring her up into the broadcast and we will say hi. Okay, I will bring you up to the broadcast. Hello, Mio. Can you hear me?
Yes, hi. I'm driving, so I don't know if you can see me. I just wanted to be in the meeting.
I can see you while you were in the lobby. Could you hear me and see me or not?
Yes, I can see you.
You can see me now, but could you see me when you were in the lobby?
Yes, I could see you.
Oh, that's good. So I can either put you up in the broadcast, and that's where you are now, or I could leave you in the lobby. But I've been talking about equity marketing and how we can use other assets to help people buy and sell their property. And a little bit about Mio. She is a part of the National Council of Exchangers. She's a broker living in Los Angeles. And so she understands equity marketing and using other assets. She understands creating notes and doing creative out of the box thinking. So thanks for joining the broadcast, Mio.
Thank you for inviting me here.
So are you in a position that you can tell us what you think about using other assets to help people buy and sell property? I know you've got some clients that are from overseas and they're hunting really good assets.
Okay, so can you say it again?
So what do you think about equity marketing and how to use other people's other assets to make transactions?
How do I think about it?
Yeah.
Like using a different asset rather than cash?
Yeah, using cash and promissory notes and a house or a building or something as to bring the value in.
Sorry, just can't really hear you well.
Oh,
Yeah, so my clients overseas, they're not familiar with the equity marketing. Yeah, the tax form is different and sort of like investment purpose is different. So I, as educate myself, educate my clients using equity they have, because what they've been investing is they have investment properties and they sell them and then buy the new property rather than exchanging or like utilizing other properties they have. They usually think about one property um, each, not combining all together.
and so your clients really are in the cash market and they come in with cash or new loans and they'll buy a property with a good cap rate and it makes sense and they can see some good rate of returns, and that's what they're looking for.
Right.
And so, since they're from overseas, they don't have any other assets in this country, but they can come in with cash and they could create a promissory note and something like that.
Right. So as far as the promissory notes, also they don't know what they are because they know what loans are, but they don't know what promissory notes are. So basically, they're gonna become like a bank, right?
Right.
They don't see the benefit of not becoming a note holder yet. So this part is also I'm facing challenge to educate them and give them information as much as I can.
So in Japan, most all the transactions are just done by cash or going to the lender and getting money, right?
I believe so. I have not practiced real estate in Japan. Property investment is totally different. We have a different structures and different how do I say benefit and disadvantage. People don't put a value on the more like a resale property, but most likely newer development. So totally different mindset. But some of the foreign national investor from Japan, they know how they can benefit from properties in US because of the property values and the cash flows and all that.
And so they're mainly interested in cash flow. Is that correct?
Yes and no, it depends. Because a couple of them are more interested in sort of tax benefit. In Japan, we have different tax benefit, like single family home, like residential. If it's older than 20, the building is older than 22 years old, they can depreciate within 4 years. So it's totally different. But yeah, commercial is a little bit different. So a couple of them are doing that, and other couples are more looking for, I believe, appreciation.
Appreciation, huh? And they usually
and then
cash flow and appreciation. They like to hold this property for quite a while too, don't they? Well, Mio, you have locked up on me, and so probably let's see. We'll wait for just a second to see if Mio comes on. But Mio has Japanese investors that are coming to this country to invest in property, and I know from talking to her at the National Council of Exchangers that her and her clients are looking for a minimum of 8% cap rate. And I think they like medical properties. They like more than one tenant in case they would have an empty building if they just had one tenant that's going to leave. So that's the way you make a good contact is with people like Mio when you go to these National Council of Exchangers. And we get to meet people from all over the country. So Mio, you have locked up. You're going to have to refresh your browser and join me again. I will drop you down into the lobby and maybe you can get back on. So thanks, Mio. Add that to, we were talking about counseling, and I think there's many things that you need to ask your client, and that is just a lot of questions. Where are you going? Why are you going? Why are you selling? Why do you think the price should be this much? What is your cap rate? And you should share with them the market cap rates and things like that. And also, what other properties do you have? You know, we see at the National Council of Exchangers a lot of people that are going up in value. They're taking a house and going up to larger houses. They're taking buildings and going up to larger buildings. And so if you've got property, land and houses and buildings, those can be added to a transaction to increase the value, and you can go up to millions of dollars. Let me give you an example. If you got a house and it's a rent house, so we're talking about investment properties, and it's a rent house and it's worth $200,000. And let's say that you've got a vacant commercial lot worth $100,000, and you got a promissory note that is worth $100,000. Well, there's $400,000 worth of equity right there. And that buyer or that seller may, if you're going to try to buy their property, be willing to take your promissory note, your land, your house, and cash for their property. So it's much easier than going to the lender and getting a loan. Because let's say when you go to a lender, especially on investment property, the first thing they're going to ask for is an MAI appraisal. Nothing wrong with appraisals, but your closing cost for an investment loan or commercial loan is a lot higher than it is for a residential loan. And so, but the commercial loan, your terms are going to be different. Your inspections are going to be different. The whole thing is just different. But using these other assets is a very good way to buy and sell property. I'll give you one example of due diligence in getting a loan. Several years ago, I sold a 40-unit apartment complex, and there was 2 sets of due diligence. And just to get the income and expense due diligence was $750 for each one of them. So not only that, but they had to have an MAI appraisal that was about $5,000. So the due diligence is going to come in. And so you as a broker need to be able to ask those questions and know those questions. I'll give you another example. Had a fellow that had a nice, very nice office building. He was having trouble with the partners, and the partners were not able to make the payments because of health issues. And so the building had a big vacancy factor, and that's always a problem. And so they were coming out of the pocket with thousands of dollars each month just to keep up. And my first meeting with the seller was, I've got a $125,000 piece of land, and we'll give you cash for the balance. And he said, no, I don't want the land. I don't know what I would do with the land. I would have to sell the land, and I'm just not interested in doing that. I said, okay. About 2 months later, he came back in the office and says, I would probably take that deal. And so we did the deal. And what was the benefit to him? Their payments were reduced to zero, and they were not coming out of the pocket. They didn't, because they had a vacancy. And so that saved them about $4,000 a month right there. He wound up with a piece of land that he didn't want, but he's still got that land today, and he's farming it, and it is for sale. And so the transaction worked out great. My buyer was able to divest himself of a piece of land that he no longer used. And the new buyer, the guy that owned the office building, was able to get out of a building that he couldn't rent because he couldn't remodel it. And so it was a win-win for both parties. Now I see that Ed has joined the show. And while we're getting ready to bring him up into the broadcast, let me say this to the brokers out there that always talk to your clients and counsel your clients and find out what they've got in other assets that may be able to help you help them in their situation. So, Ed, I can see you in the broadcast, and I don't know if you can hear me or not, but I'm going to bring you up into the broadcast. Here you come. 3, 2, 1. And let's see.
How are you, Chuck? Can you hear me?
Okay, Ed, where are you? Hey, Ed.
Yes, can you hear me?
Yes, I can hear you just fine, and I can see you real good. Your lighting is good, and so you are in the broadcast.
That's great. That's great. Are we alone? Just you two? And
no, we got the whole world watching.
That's fantastic.
And so what we're doing is talking about, me and you are the only ones that are on the screen. And Mia Gorio was on, but she was driving, and actually we got to hook up with her.
Oh, really?
I could talk to her while she was driving, but then she froze up and had to leave. But you are on the air and you are live to Facebook. And so what we're talking about is equity marketing. And I mentioned what you and I were talking about was those 10 things that we ought to develop that people should ask every buyer and seller. So, Ed, give us your intake, how you view equity marketing and using other people's assets to help buy and sell property.
Well, let me see where to start on that. That's a big subject. That's a big subject, but I think the foundation, if you will, of that subject is really a relationship with your client that doesn't take place in most transactions or most discussions. And I think that the great people in this business, the investors, the brokers who have given us the equity marketing techniques, have also told us in their wisdom that it's so critical to have a relationship with your client that goes so much deeper than the relationship with what I believe the typical broker has with his typical client. And the basis of that relationship really is, of course, trust and, of course, honesty. But the practical basis is going through a series of questions to dig up and to find out and to uncover what the true motives are of the person who is meeting with you to possibly list their property. And so many times I think today's brokers are in a situation where they just feel that the ultimate objective is to get a signature on a listing agreement and to run out and stick a sign in the ground or run out and pop this listing on the MLS or some of the national leaderboards and wait for the telephone to ring. Whereas I think you and I, Chuck, know that it's so much deeper than that, and it's so much more critical to understand just where our client is really heading, and not only the reasons why he's selling this property or leasing this property, but what he plans to do in the near future.
You know, I think that's just really critical. I see one thing that most brokers do is they try to get the highest price that you could ever possibly get, and that's based on market studies, and that's okay. But like you said, back to the relationship with the seller or the buyer, I think that you need to know that why that seller is selling, because their motivation may not be price. Their motivation may be, I've lost my job. I need to move. I can't make the payment. The taxes are too high. I'm getting out of this business. We need to understand that motivation very thoroughly so that we can say to that seller, you know, if we didn't ask for the top of the price in value, top of the value in the market, and we reduce the price by 2%, we may get 10 more offers and be able to accomplish your goal of having to move in 60 days. I mean, that's the kind of stuff that you and I do is we do in-depth counseling.
I agree. And I think the process of asking questions and receiving responses and evaluating based on the answers to our questions what type of solution might be best for this particular owner. We've talked, I think, in the past about the possibility that in our meetings, for instance, someone will get up to the podium and will basically present an opportunity that appears to be a tremendous opportunity, appears to be a asset that we just scratch our head and ask, why is this person selling this property? Because it seems like he ought to continue to own it. And through either conversations or someone raising their hand at the meeting and asking that question, which is, why in the world are you selling this thing? And finding out that they're not selling it because they want to, but they're selling it because they have to, because they've had a life circumstance, be it a medical, be it a divorce, be it a business problem that they have that, quite frankly, forces them up to that podium to sell this property, which they would just as soon continue to own. And I think in that circumstance, if we just capsulize that circumstance, my guess is that 99 out of 100 brokers out there will listen to the presentation, and that the response will be, my gosh, we've got someone here that's really in distress that, I might be able to take advantage of. And I don't mean unprofessional advantage, but I mean, it's obvious that this person is either has a deadline to sell or has a strong reason why he has to cash in this property. Whereas you and I might ask the question, and we might raise our hands and say, listen, would you do what we call in the trade a discounted sale and buyback? If that property is worth $1 million, would you sell it to me for $500,000 if I gave you the option to buy it back for $600,000 in a year or 18 months? And that way, I would receive a return on that option, a generous return, but more importantly, you would come up with a result that allows you to continue to maintain a vested interest in that property, which might be, let's say, dramatically appreciating over the next year or two. So I think you and I, Chuck, in attending our meetings, the NCE meetings, National Council of Exchangers, we begin to think differently, and we begin to think more broadly about solutions. But the only way that we can suggest those solutions is by professionally asking a series of questions which result in information that allows us to suggest different solutions that the average broker simply either isn't aware of or wouldn't suggest.
I think that's really good the way you put that, because a lot of brokers, I mean, the first question that you see on a property that looks like is a pretty good deal, and you want to make sure you're not buying a dump, is you say, why are you selling? And when people answer that question, like you said, there could have been a death in the family or a divorce, and they have to move and they don't want it. They want that property. They bought it for retirement, and now they have to sell it. And your idea of saying, well, besides just selling it and getting rid of it and taking a discount because of your situation, I mean, we don't want to take advantage of people. So you say, yes, I will buy it, and then I'll give you the option to buy it back. I mean, that's a tremendous solution. And like you said, we start thinking not how to sell the property, because that is secondary. We think about how to help that client. And it doesn't matter if it's a buyer or a seller. We're going to help that client. And yes, we're going to make a profit on doing that. Just like you said, you can buy it back plus 100,000 or 6% or 10%. And so you structure that deal that's good for both of you. You get
Correct.
paid for your money, and they get the option to buy that property back when life circumstances change.
Right.
And I think that's the difference between selling and client involvement in equity marketing. If you don't have that client involvement and you don't ask those questions, then to me, you're just a peddler, like going down to Walmart and buying something off the shelf, which does not help the client in a lot of cases.
I agree. And as we talked about earlier today, I have seen hundreds of commercial listings that have been advertised in various internet platforms that basically never mention the circumstances of the buyer, of the owner, never mention the intentions that he has, never mention the circumstances where he may be able to add a considerable amount of cash to his next transaction, his next acquisition, because he's entering into a 1031 exchange. And I think the inclusion of those answers that he gives, or that those responses that he gives that are so important, can result in a response rate to that ad that is wildly greater than the response rate that someone would get by doing nothing more than giving the data on that property. How many acres is it? How many square feet? What's the rental income? What's the debt on the property? Those are fine and those are very important, but the additional dimension of knowing where the mind of that owner is and what he wants to do next and where he wants to do it and what he wants to buy can so facilitate the next transaction that he jumps into. Because as you and I know, Chuck, the last thing in the world I think anyone wants to be in the situation of is finding that buyer immediately for the price you want and having to close that property ASAP, and then looking around and saying, my gosh, I only have 45 days left to identify my next investment. And sometimes that 45 days is just not enough time to look into
It goes
the,
quickly.
yeah, I mean, it just flies. So knowing where he's headed in the future, being able to show the answers to those responses and let that person who just clicked on this particular listing know that, oh, he's looking for apartments. He's looking for apartments in Southern California. And my gosh, I don't have them, but I know my friend has some apartments for sale, and therein lies the second half of that transaction, which everyone can participate in.
That is so good. And what you said about the MLS listing system, I just took a listing the other day on a piece of vacant land, and down in the agent confidential remarks, I put everything in there that that seller is willing to do, because that is our platform to advertise in. And I said, he will take your property, he will bring cash, he'll bring other assets, he'll create notes. We will go up to $2 million, and we are hunting storage units. And so right there in that MLS, you put everything out there that people could say, wow, oh, I know somebody that's got that property and we could do that. And that's so different than just putting it on the MLS, putting the sign up, and letting people try to find it and guess what you're trying to do.
Exactly.
I tell the agents here, we've got a box on our MLS system that you check it. Yes, you will trade or exchange. And that's kind of not a term I like, but they will say no and not check that box. And I tell agents, you know, today, if you ask that question correctly, your seller will do this trade or exchange. And I say, if I'm going to buy your $300,000 house and give you a $25,000 lot and give you 275 cash, would you take it? And she would say, well, yes, I will take that deal. And so asking the right question, putting the information out where people can find it, and dwelling on that instead of just waiting for somebody to come along and buy your listing off the shelf.
Sure. Well, what I've done is I put together a report on what I believe are the 10 most important questions which you should ask your client. And I think more importantly, I've included the background reasons why you should ask those questions, because so many times a person will just simply read a list of questions and not really know why he should be asking them. And if someone wishes to have me email this to them, my own email address is edberlinski@gmail.com, and I'd be glad to send it to them.
And so edberlinski@gmail.com. Now, Ed, I'm going to put that on the screen, and I want to be your first one that gets it. edberlinski@gmail.com. I just sent it to you.
Okay, great.
And I think that is so great. I mean, like if you're asking a seller, say, why are you selling? I've had agents, and I used to when I was 30 years old, think that was prying, and I didn't want to ask that question. And I'd say, how much money have you got? Or have you got enough money to make the down payment? Or have you got 100,000 in the bank? You know, those are not embarrassing questions anymore, but they used to be. And I think agents have a hard time asking those questions that should be asked. So
I agree.
That background that you're going to put with that question, why do I need to know how much money that seller has, is a very important question.
And I think also you bring up another peripheral issue, which is that a broker who feels that he is capable of helping his client simply cannot allow himself to be intimidated by the client who refuses to answer certain very basic questions. And I think that in an appropriate professional way, the broker simply has to explain to that client and owner why it's so absolutely critical to obtain answers to these questions. He doesn't wish to know what that man's net worth is, or what his cash position is, or what the details of his portfolio are, so that he can spread this information out to the public. And in fact, he should establish that all questions he's answering and responses will be held in strict confidence. But that client should be convinced that it's to his great advantage to respond in as much detail as possible, so that that broker can help him out in as many ways as possible.
You know, and that is so great. And that seller that's answering those questions is going to learn from that experience too. You know, I've had sellers tell me, you don't need to know how much money I've got. And I truly didn't, but I wanted to know if they've got enough to go to the next deal or if they're in trouble. And we need to know those kind of things. And once you get used to asking those questions and there's a reason for it, and you ask in a professional way, then I think you're going to be all right. It's like that lady that said, she asked her seller, would you trade? And the seller said, no. And I said, you didn't ask the question right. You would say, if I give you $295,000 for your $300,000 house and a promissory note for $5,000 due in a year, would you do it? And she says, why, yes, in a heartbeat. So you got to ask the question in the right way.
Well, and I think what you're bringing up, and I think it's worth mentioning this, is that the question, are you willing to exchange, is not always properly understood by the people who are being asked the question. So many people have the misunderstanding that when you are asked them about an exchange, they are committing to a situation, to a transaction where I will exchange my property for another person that has another property and is interested in mine. That is, they aren't as aware as you and I are that the percentage of exchanges that take place, which are immediate exchanges one for another, are a small percentage of and I use quotes for this, the exchanges which are deferred exchanges, meaning that yes, you can just sell your property as you normally would, and then we will seek out another property for you to invest in, so that they remove that false picture of I've got something and we have to go looking for someone else that has something that I want that also wants mine.
I think
that's just isn't true.
That's not true. And what you said is very true. And that is just, we didn't ask the question the right way. I mean, if you're going to exchange, you're going to have a tax deferment issue and you need to do it that way. And that's why I have trade and exchange, and it's very difficult without the background story. It's not trading and exchanging for one property for another. It could be, but it's really equity marketing. And that's why I like that term, is because we use other assets to accomplish your goal and solve your situation.
Yes. Well, I have to be heading out right now.
All right.
I must say it's been an absolute pleasure, as it always is, speaking with you, Chuck.
Well, Ed, it's been great to have you on, and I hope I put your email up on the screen, and so I hope people ask for those 10 questions that every real estate broker ought to be asking, and maybe they'll get something out of equity marketing.
Well, listen, I thank you again, and this is hoping that we reconvene in the near future and talk more about real estate.
I'm thinking about talking about net operating income next Tuesday. So
that's a great subject. That'll
be a fun one to do.
It will, and so important.
And if you come across the subjects you would like, give me a call and we'll email back and forth and set up a show.
Okay, you take care.
All right. Thanks, Ed.
Have a
So that was Ed Berlinski. He's a certified commercial investment member, and he's a member of NCE, National Council of Exchangers, and the Society of Exchange Counselors. And he's also a private money lender. And you probably ought to email him and get those that list of 10 questions that every broker should be asking their seller. So I'm glad you were able to join the show, and hope you watched and hope you got something out of equity marketing. It's not all about trading and exchanging. And if you're doing a trade, a piece of land for a piece of land, that rarely happens. If you're trading a building for a piece of land, that rarely happens. But what happens a lot is that you use other assets for equity. And this small town I'm in, I traded 16 lots for a commercial building in Ouray, Colorado. I traded a medical building in cash and some land. So using other people's assets as well as other people's money, you can put together some really good transactions that will really help your buyer and your seller. Now, if you got a buyer coming in the office and you ask that buyer what other assets you have, you'll be really surprised to learn what people have. I've traded for motorhomes and promissory notes. And you probably are not aware of it, but there's a thing called life settlement properties and life settlement insurance policies. And I see those at the National Council of Exchangers. And so even insurance policies can be traded for property. You can trade Bitcoin, you can trade securities, you can trade notes, land. You can bring any of these things into a transaction because it has equity. And that's why we're talking about equity marketing. Cash is just a commodity. Equity is just a commodity. It's just in a different form. And so I can take that lot and I can sell it and get the cash, and then it's in the form of cash. So think about equity marketing and think outside the box and try to put a deal together. In fact, I've got several pieces of properties right now that we would love to do an equity marketing deal with you. I've got a 1.5 acre tract of land that's commercially zoned on the east side of town. And we're really hunting storage units, but we will trade that piece of land for your building and bring cash to the table, our promissory notes, or some other way to balance the equities. In other words, we're willing to take that $200,000 piece of property and we'll go up in value, we'll go sideways, we'll go down in value. We'll take a piece of property that you have that's worth less than what our equity is, but my seller will definitely trade. And he has been asked those 10 questions that Ed mentioned, and he understands that we're going to use this 1.5 acres as a down payment or part equity for some other piece of property. And we're not area bound. If you got storage units anywhere in the country, we would certainly be able to look at those and see if we could put together a transaction that would make sense for you and your client. So I've enjoyed the show today. This is Chuck Trice, and my email is chuck@montrosecommercial.com. And we would love to hear from you. And if you would like to come on the show and ask real estate questions and talk about real estate, we'll do our best to answer those questions and give you creative ideas and solutions. You know, there's over 300 ways that you can buy and sell real estate. And that's just the ones we know about. So, this is Chuck Trice, and thanks for watching.